Hi, my name is Devin Gambino. I'm the CEO and founder of Lendefied. I'm giving you a quick tutorial on a product that you might not be so familiar with. It's called Ramp by Visa. And if you are a small business owner that's using lines of credit, but the lines of credit you're using are more credit card based, what you're going to end up with is something that can roll over past that 30 days and now you're paying interest, right? What Ramp by Visa does is it gives you an extra 30-day net term on your current expenses that are billable. So if you have, say, a vendor that's going to bill you every net 30 days and you're maybe behind with the vendor by a week and you got to get them caught up, but you don't want to use personal credit cards. Ramp by Visa will extend 30-day net terms to you for you to pay those vendors. Now a 30-day net term vendor becomes 60-day net term vendors, and so on and so forth. The other piece of what happens on the back end for your CPA or your accountant or your bookkeeper is logging and tracking expenses. And this is tough for a small business to be able to monitor all of the customers that, or I shouldn't say customers, all of their employees that have their own spend card. And if you do have the type of setup where, say, you're a transportation business and you have each of the drivers have their own card to buy gas, it can be tough to manage to make sure that the receipts are coming in when they purchase gas. If there is no receipt, then how would you get it back? You kind of can't categorize it then. Well, you can, but it's up to a flag if it ever gets audited. These little things are able to be tracked, managed, and expensed in Ramp. And if you did it there, their business account pays you 4.75% for the money you're putting in it. So if you're going to pay your electric bill with a credit card that pays you 1.5% cash back, Ramp pays you 1.5% cash back on the spend and pays you to leave the money there in the 4% range if you're using the investment account. Standard account still 2.5. So for those small business owners who might not be so educated into what product software is a better fit than others, start with Ramp and then move your way over to Bill.com. See if Bill.com is a better fit. Bill.com is, in my opinion, the smaller business owner that's more transactional. Ramp is going to be for the larger enterprise clients, but again, small and mid-sized business owners can still use it as well. These mixture of products that don't show on the personal FICO, that maybe will build business credit, that is how you have a business that finances itself versus having the business owner do the financing when the times come that you need it. There is a component to Ramp where their line of credit approves you based on how much money you have in the bank. So if you only have $100,000 in the account, let's say, they're only going to give you $17,000 to $20,000, give or take, on that line. And so there is a component to Ramp where you're not going to use it to do your next phase of growth, but if you've just funded an SBA loan or a term loan, or maybe even a merchant advance or an ACH product of some kind that's shorter term, using this to help in the gaps between the next project paying you or the next round of inventory actually having a return, using a product like Ramp is a really good way for you to save your cash flow from the expense of running your business before you've seen the profit from the things that you do in your business. If you have any questions or you want to reach out to one of our representatives here at Lendefied, we'll be able to give you all the guidance you need and all the support that you could possibly ask for so that you're getting the most out of it and not just with another tool in your tool belt that you're using 20% of it, because we know as small business owners, we have way too many of those. Thank you so much for taking the time to watch.